What if I told you that one singular candle can tell you everything you need to know about price? One candle has so much information that you can determine exactly where price is going to head towards next. If you're confused, don't worry. I'm going to explain exactly what I mean by this and how you can use it to your advantage. So let's get into it. So in today's video, I'm going to go over the importance of one singular candle and how one candle you can determine where price is most likely going to head. So right here, what we have is the anatomy of a candlestick. Right here, we have a bullish candle. This can be on any single time frame. This can be on the 5-minute, the 15-minute, the 1 hour, the daily chart, right? Which we understand here is that we have a bullish candle. We have our open, we have our low formed, then we have a high and our close. So if we're bullish, what we want to do is look for buys as close to your opening print as possible. A good rule of thumb is we want to be buying below the opening print or as close to the opening print as possible. So what you can see is we have our open, we make a new low, break back above your opening candle print, and then come back and retest. This is one of my personal favorite entry models. It's called your opening candle print retest or your opening print retest. And then we'll be looking for continuations back towards the upside. And then of course, right, the high is made and then we end up closing the candle right here. So what we'll be looking for is essentially buys below your opening price or as close to your opening price as possible. This is a very safe area and a low risk entry, risking really the low of the candle. And you're going to be looking for moves all the way back towards the upside. And this is just based off one candle, right? As I mentioned, this can be a daily candle, this can be a 1 hour candle, but in between these higher time frame candles, we're going to be looking for essentially this model on an intraday smaller time frame. And the same thing can be said on the downside. So you can see right here what we have is a bearish candle, right? We have our open, we form a new high, we have our low, and then we close around close to low of day. So price, as you can see right here, pushes towards the upside, makes a new high, breaks back below underneath your opening price, comes back up, right? This is where we're going to be looking to short, right? We're going to be looking to short anywhere above your opening print or as close to your opening print as possible. And then we'll be looking for continuations all the way towards the low of the range, which can be your previous day low. It could be a weekly low. It can be whatever type of low, depending on what candle you're on. But the importance is understanding where you're going to be looking to buy. If you're bullish, you want to be buying below your opening price or as close to your opening price as possible. If you're bearish, you want to be selling above your opening price or as close to your opening price as possible. We want to be buying in areas of fair value and not when we're at the low of the candle where it wouldn't make sense to buy. So let's go and see exactly what this looks like from a daily time frame perspective. So as you can see here, what we now have to understand is daily bias. I'm going to talk about daily bias more here in a second. So let's say, for example, we have our previous day high. So we have a daily chart here. What we have is your previous day high. We can mark this out and we can also mark out your previous day low, which is all the way down here. So what we have is your New York session. So this is your previous day high and your previous day low. As you can see right here, the candle is being put in, right? It opens here, right? Makes a new low, comes all the way up, right? Forms a new high, and then pulls back and closes right here. So this is essentially your previous day's candle. And then what we have in between here is your after hours and pre-market. So a lot of the times right in the after hours and pre-market, what we'll do is consolidate. You can see right here, we kind of just consolidate in this area. And then for example, the next day we open up in the middle of the range. If we open up in the middle of the range, what are we going to be looking for in this case? Let's say we have a bias, which is bullish. We're going to be looking to buy anywhere below or around your opening price. So let's say price pushes towards the downside, right? You can be looking to buy in this area, or you can wait for price to break back above, come back, retest essentially your opening price. This is my personal favorite, right? An opening range break and retest. And then you'll be looking for what? Continuations to where? Your previous day highs with a stop just to break below, because you're buying as close to your opening price as possible and you're looking to target a clear level being your previous day highs, because these previous day highs, right, they're clear targets. What's resting above them is liquidity. So we're going to be looking to target these previous day highs and previous day lows levels. So this is a clear model that I use on a day-to-day basis. I'll be looking for the opening candle retest for a move towards your previous day highs or your previous day lows, depending on what type of bias I have on the higher time frames. And as you can see on the next example, right, it's the exact same thing for the downside. So what we have is price opens here, makes a new high, right, comes all the way down, makes a new low for the day, and then you can see how it closes. Price in the after hours consolidates, and then you can see right here what we have is our open. So in this case, right, we're bearish. what we're going to be looking for is sells above your opening price. So price opens right here. We're going to be looking for sells above your opening price or as close to your opening print as possible. So we'll be looking for essentially the retest of, let's say, your opening candle retest with stops just a break above. And we'll be looking for continuations down towards where? Your previous day lows, which is a clear liquidity level and a clear target as well. Now, since we figured out the anatomies of how these candles form, the next thing to understand is your daily buys. Once we understand your daily buys, then we're able to trade up into those highs and lows of the candles. So now let's go into exactly how I determine my daily buys on a day-to-day basis. So as you can see right here, we're on the NASDAQ daily chart, and the easiest way to determine your daily buys on the daily time frame is by looking at the previous day's candle. So you can see right here what we're going to have marked out is your previous day's candle. You can see we have marked out your previous day's candle. You can see currently, right, this previous candle is inside of its previous candle. So you can see what we have is an inside bar day. So whenever we have what's called an inside bar day, right, you're not going to have a bias, right? There's no clear direction in the market. It could take out the upside. It could take out the downside. So there's no bias here. So it's going to take out both sides. So we'll play out the next candle. You can see in this case, come down, price opens, sweeps out both these targets, sweeps out both these lows, and then gravitates towards the upside. So you can see in this case, though, what we have is actually a clear target now. So you can see price, right, closed above your previous day's candle, right? So once price closes above your previous day candle, you can expect the next candle to gravitate towards upside. So now what we'll have marked out is your previous day high and your previous day low. Based off what this previous candle has done, right, since we've closed above your previous day high, right, what's more likely to get hit? Your previous day highs or your previous day lows? In this case, right, it's going to be your previous day highs because we already took out your previous day's high, which is your Monday's highs. The next candle should expand towards the upside. So you can see in this case, right, big expansion towards the upside. So now you can do the exact same thing. Mark out your previous day highs and mark out your previous day lows. In this case, price closed at the very high of day. What's more likely going to happen? We're going to come out, take out previous day highs, or we're going to come out and take out previous day lows. Of course, we're going to come out and take out previous day highs. So you can see in this case, price, right, took out your previous day highs, but closed back inside of this range. So price, in this case, now what you have marked out is your high and your previous day lows. As you can see right here, we took out your previous day highs, but we closed inside of this range right here. So now what you'll have is you're not going to have a bias because price, right, took out your previous day's candle, but we closed inside of its previous range, right? We took out the high, but we closed inside of its range, so you're not going to have a bias. So you can see a similar thing. Price took out your previous day lows, but it closed inside of its range, so you're not going to have a bias. So now you're going to mark out your next candle's high and your next candle's low, right? What's more likely going to hit? Most likely your previous day highs, just due to the fact that, of course, if you look back, right, it's coming back into key retest levels, right? We're in a bullish move towards upside based off the past previous candles, so you can expect it to now gravitate back towards the upside. You can see right here, price ended up taking out your previous day highs. It also ended up taking the day before your previous day's high out as well and taking out this key area. So now you mark out your next candle. As you can see right here, what's happening? Price breaks above. As you can see, price breaks above your previous day high. We're closing above your previous day high. We just made a new high as well. There's a very good likely chance that we end up gravitating towards the upside. As you can see right here, we have another push towards the upside. So let me clear off some names. Mark out your high of your candle. Mark out your low of the candle. You can see the previous day, we end up closing above your previous day's candle just slightly, but you can expect, right, most likely continuation towards the upside, right? So price ended up sweeping this high once again. Now what you want to mark out is your previous day highs. Drag it over. Mark out your previous day lows, right? You can expect some more continuation because what did we do? We closed above your highs, right? Your previous day highs, right? You can expect continuation back towards this high right here. So price, as you can see in this case, takes out your previous day highs, target hit, came all the way down, took out these lows as well. Now what we have is a pretty big range. So we have marked out your previous day's high, your previous day's low. Now in this case, right, we have a very big range. You're not going to have a bias, right? You're not going to have a bias in this day because you have a very big range being your candle high, your candle low. You can expect this range most likely to be in the middle. So you can see in this case, we're inside this middle of the range. What we have now is an inside bar day. So you can mark this out. Inside bar day. A lot of times, as I mentioned, when you have an inside bar day, you're not going to have a bias. Price breaks above your highs, but we're still within inside this range. So technically, we're still have an inside bar day. As we keep kind of playing it here, we still have an inside of this range right here. So we're still with inside of this range from this big candle, right? A lot of the times inside this range, it's more of kind of consolidation. So you can see right here, what we do is we finally break outside of its range. So we end up breaking outside of this candle's range. You can see as well where we're closing fairly weak. We're closing underneath this candle's low as well. So what can you expect? This next candle, right? If we mark out this candle's low and this candle's high, right, where can you expect price to gravitate towards? Most likely towards the downside, towards this key low, because we just closed outside of this range. We have a bearish day as well, right? You can expect it to gravitate towards the downside. And you can see price, really big wick as you can see here, but it took out your previous day's low, but you can see exactly where it wicked down towards, right? Of course, right, if you're combining higher time frame context and you have other things as well, let's say in this case, right, order blocks, right, key levels, key breaking retest levels, that's going to add on to your confidence with your daily buys. See, price came all the way back down into your order block. You can see where price closed. So you're not going to be bearish anymore because what happened? Price took out your previous day lows, came all the way down, tapped this order block, but you can see how big of a wick this is, right? It wicked all the way down and towards this order block, but now it's also closed inside of your previous range. So you can expect, what can you expect to happen? Most likely, if you mark out this candle high, let me get rid of a couple lines here. What's more likely to get hit, right? This candle high or this candle low? Most likely this candle high, because we end up closing inside of the range. We're still in a bullish environment. You can expect this to kind of push back towards the upside. And see right here, price ends up taking out your previous day highs, right? Close underneath, right? No bias in this case, right? Close underneath this candle. So you're kind of neutral. You're still neutral as you can see here. Now it's getting closer, right? You're still neutral, but you have kind of a double top here. Most likely will gravitate towards upside. Bullish candles, you can see right here, what we want to mark out is your candle high. Want to mark out your candle low. What's more likely to get hit in this case, right? Price basically closed very bullish on the day, and we're well above your previous candle's high as well. So more likely we're going to continue towards the upside. See here, price takes out your previous day highs, close inside this range, mark out this candle's high, this candle's low, right? Could take out both sides, right? You're neutral. In this case, as you can see again, price takes out both sides, right? Takes out your previous day lows, takes out your previous day highs. We're just coming back into key areas though, essentially your key break and retest level. So most likely, based off this scenario, we're most likely going to continue towards the upside. Now you can see price, mark out the candles. As you can see right here, what we have is an inside bar day, right? In a bullish environment, came back down, retested. The most likely next draw is towards the upside, right? Pushes higher, mark out your candle high, expect another push towards the upside. Right, price is fairly bullish now. You're just marking out your previous day highs. You can expect it to gravitate higher since we're in a bullish environment. So now, since we understand how to determine your daily bias, now we can go on to the lower time frames to form a thesis around your daily bias. So let's get into it. So now we're on the lower time frames here. We're on Tesla, as you can see right here, and we're going to be marking out key levels. Right, we're going to be marking out your previous day highs, drag this over your previous day lows, drag this over. So these levels, as I mentioned, are used as essentially targets or potential entry points. So you can see right here, we're on the 1 minute time frame and we have our previous day highs and previous day lows marked out. Now we can play the tape coming to market open. So price, you can see right here, bullish right off in the first candle, right in towards your previous day highs. So if you're bullish, you kind of want to see a reclaim of your previous day highs, continuation towards the upside. And if you're bearish, you want to see a break back below your opening candle print, potential retest of this, and continuation down towards your previous day lows. So we'll play out the tape here. You can see the very next subsequent candle, right? Very big rejection off of where your previous day highs. We're now underneath your opening print as well, and underneath this opening candle print. So now this level, right? Your opening candle print can be used as a potential retest area for continuations down towards where, right? Down towards your previous day's low. So now we'll look for a potential retest of this area. if we can look for an entry point, right, we'd be looking for essentially, right, potential rejection off this area for a continuation back towards the downside with the stop just to break above. As you can see right here, where does price gravitate back towards, right? Your opening candle range low, which is your 1 minute, as you can see right here, and also your opening print as well. So as I mentioned, what you want to see happen is if you're looking to sell price, you're looking to sell price around or above your opening print. So in this case, we're fairly close to your opening print. So we can be looking for sells around your opening print with a stop just to break above, and your targets are going to be all the way down towards your previous low of day. So you can see right here, we're going to be looking to short with a stop above high of day, and we're going to be looking for your previous day lows. And now we can play with the tape. And you can see right there, price eventually gravitated down towards where your previous day's low. As you can see right here, fairly nice entry and exit point, right? You're looking to sell around or above your opening print, and your targets are going to be essentially your daily candle. As you can see in this case, right, this is your previous day high, this is your previous day low. So if you think about this as in a singular candle, right, we're going to be looking to target these key areas, which is your previous day high and your previous day low. So that's why we're going to be looking to target these areas, because there's a lot of liquidity resting above and below those levels. If we're not looking to target those levels, we can also be using those as potential retests as well. So now we can play out the tape. Right, so we kind of fast forwarded the tape here, right? We exited our full trade at your previous day lows, but you can see exactly how this candle was used, right? Price, right? We had a nice opening range retest on the 1 minute down towards your previous low of day, but you can see in this case, once we got below your previous low of days, right, you can see price ended up using this as a retest. So this is what's so kind of mind-blowing here, is that you can use these areas as potential targets and potential entry points as well. So you can see price, big push down towards your previous low of day. This is already one trade in itself based off of your opening candle print, as I mentioned, but this can potentially be a whole other trade thesis, which is your previous day's low retest. So one candle, as you can see, right, you had a very nice trade towards the downside, and it potentially could have offered you another setup if you were using this essentially retest point as a potential entry for more continuations towards the downside. So now let's go on to the next day for Tesla. So now we have our next days marked out. So you can see right here, this was the previous day on Tesla. Now what we're going to mark out is your previous day low. And in this case, what we can mark out is all the way back up towards your previous day high. So we can kind of drag this over and wait for price, right? We're going to be looking to target either one of your previous day highs or your previous day lows. So based off the price action coming to market open, we're going to be looking to target your previous day lows or your previous day highs. So we'll play the tape here on the lower time frames. So you can see, right, what we have is your opening candle print. As I mentioned, right, if you're bullish, what do you want to see? You basically want to see a break above retest. If you're bearish, what do you want to see? A break below your opening candle print and potential retest towards the downside. So you can see here, right, we'll kind of play out the tape. Price breaks above your opening candle print. So you're going to be bullish for now, since this is your opening candle print high. And you see this level, it essentially be used as essentially a key retest level. You see price, right, comes all the way back once again, right? You have one retest here, you have another retest here as well, right? You can be looking to get in longs off your opening candle print with a risk just to break below. In this case, where are you going to be looking to target? You're going to be looking to target essentially your previous day highs, right? Of course, this is fairly far away. This is a 7 risk to reward ratio, which is very unlikely to hit. So you're going to kind of take partials along the ways, right? You're going to be looking to scale at high of day. If you're looking at other key levels, essentially you can drag this over, right? This is your previous support turned into resistance. So this area can be used as a target as well. So you can have a couple partials, right? Based off the price action intraday wise, you're bullish so far because we're above our opening candle print high. We're using this as essentially a retest level. You're not going to be short because you haven't broken underneath your opening candle print low. So you're going to be looking for long positions for kind of a move back towards the upside. And you see price, you would have scaled here, maybe half your position, and then you could have taken off half your position at this 219 level as well. And then of course, right, eventually if it did want to gravitate towards 224, which would be highly unlikely just due to this kind of a range that we're in, also due to time as well. Right now, we can go into the next day Tesla has. So we're on the next day on Tesla once again, and now we can kind of clear off our levels, right? We can draw new levels being what? Your previous day lows, and we can mark out your previous day highs. right? So as always, right, we're going to be looking to target either one of these levels, and based off how price opens, right, if you're looking for a short position, you want to look for a short above your opening price or as close to your opening price as possible. And if you're looking for longs, you want to be buying below your opening price or around your opening price for a move back towards upside. So we'll play the tape coming to market open. You can see right here in the first 5 minutes, right, big push towards the downside. Now we can go into the 1 minute time frame. What we're going to have marked out is your opening candle, right, low, opening candle high. If we're looking to short, right, we want to get in as close to this level as possible for a potential short position towards the downside. If we're bullish, we want to see price essentially break back above, retest, and continuation towards upside. In this case, we're looking for a bearish setup because we're underneath our opening candle print. So we're going to be looking for a potential retest of your opening candle print to target where your previous day lows in this case. Comes back all the way, taps into your retest level fairly nicely. You can see the next candle was a rejection candle as well. You can have your stop just to break above. And now we can be looking for where, of course, right, your previous low of day, right, that's where your liquidity is resting. That's a clear level that we can look to target for price. And you can see right there, price ended up eventually having a nice move towards the downside, straight towards where your previous low of day, which is, as I mentioned again, your liquidity level on the daily time frame. So these levels, as I mentioned, they're always going to be key liquidity levels on the higher time frames. Now we can go on to the next previous days as well. As we draw out some new levels here on this next previous days, you can see as well, right, how these levels are used, right? We end up using this as a target here, which is your previous day low. But you can see, right, these candles ended up coming back and retesting, right? Your previous day low was essentially used as a retest once again for continuations towards the downside. So as I mentioned, right, if you missed that first opening range retest to target your previous low of day, right, you can always look for potential continuation, meaning, right, you can look for the retest off your previous day high or your previous day low for continuation in the trend towards that higher time frame direction, right? It's the same thing. Price is always fractal, right? It's the same thing on every single time frame. And in this case, right, if you're looking to short off your previous day highs, you just be looking for that next candle, that next previous day highs, or maybe like a weekly high objective. So in this case, now what we're going to have marked out is your previous day highs. We can kind of remove these levels, right? Previous day highs, and we can mark out your previous day's low. So in this case, right, price fairly bearish towards the downside, right? We most likely have a bearish bias coming to today. So we're going to be looking for sells above your opening price or as close to your opening price as possible. So now we can go into the lower time frames and play out the tape. So coming into market open, what we're going to have marked out is your opening candle range low. So coming into today, we have a bearish bias based off the higher time frames. So, right, we're going to be looking to short above your opening price or as close to your opening price as possible. So there's kind of a few scenarios you want to be looking for. A potential retest below your opening candle print for a push really down towards your previous day lows and below. So we'll play out the tape. So now, as you can see here, price breaking underneath your opening price and your opening candle print low. And we can now look for the retest. You can see in this case, right, price came down, took out your previous day lows in this case, took out also key levels as well without coming back to retest. So in this case, when this happens, the trade did not set up. So you have to be looking for a potential other trade scenario, right? Since we didn't come back, retest your opening candle print, right, that's fine, right? You could be looking for another potential trade opportunity. The opening candle range retest doesn't set up always, right? Sometimes it sets up, sometimes it doesn't. In this case, if we go back into the 5 minute, right, price, right, you would have liked the retest of this level, but we ended up gravitating lower because we had liquidity below. Now, instead of looking for the retest of your opening candle print, what you could be looking for is a potential retest of your previous day lows, right, for continuation towards the downside, right? If you look on the higher time frames, right, what we have is your previous day highs, you have your previous day lows, you have a break underneath this level. You like to see this level be used as what? A retest for continuation towards the downside. Based off of your previous day highs and lows, right, we can be looking for the retest off of your previous day lows. So now we can go into lower time frames. What we also can have drawn out as well, right, big push towards the downside. What we can draw out is your 1 minute order block, and you can look for price. You can see price came up, tapped into your 1 minute order block fairly nicely. You can look to short, stop just to break above. And in this case, right, you'll be looking for low of day and continuation below, right? Based off of your higher time frames, right? Based off of your rejection off of your previous day lows in this level as well, you'd be looking for the next key targets, which is all the way down here, right? You could be looking at other targets, but in this case, for example, we're just going to be looking for a 1 to 2, essentially towards the downside. And you can see, right, price ended up playing nicely towards the downside in this case, right? There wasn't that opening candle range retest, which we love to see, right? Sometimes, as I mentioned, doesn't always form, right? If price does not come back, retest your opening candle print, and gravitates towards your previous day highs or previous day lows, you can always be looking for potential other types of setups. In this case, right, it is the exact same setup as the opening candle range retest, but we're looking at it on a higher time frame perspective. So if we're looking at it, for example, on the smaller time frames, it's also happening on the higher time frame. So the reason why we're able to take this trade towards the downside is because price is fractal. What's happening on the lower time frames is also happening on the higher time frames. And you can see in this case, price, what we kind of have going on is price breaks underneath your previous low of day. We came back, as you can see here, a retest of your previous low of day. As you can see, previous support turned into resistance, and then you had that continuation towards the downside. This is almost the exact same setup that I was talking about earlier on the intraday timeframes, but this one, as I mentioned, happening on the higher timeframes. So you can see how crazy kind of the setups are, is that right, what's happening on the lower time frames is also happening on the higher time frames. If you know what you're looking for, you're able to capture these types of moves. So now we can play the tape and wait for the next day to form. So we're on the next day here, and as always, we're gonna mark out fresh new levels. We're gonna mark out your previous day's low, and you're gonna mark out your previous day's high. So based off of your previous day's price action, where are we gonna be? Of course, we're gonna be bearish because we're in a downtrend. Price is holding key levels. We're underneath key levels now. We're gonna be looking for essentially continuations more towards the downside based off this price action right here. Previous day lows is more likely to get hit than your previous day highs. So now we can go into the lower time frames and potentially look for a trade setup. So price, what you want to mark out? Your opening candle. We want to be looking for shorts above your opening print or as close to your opening print as possible. In this case, right, for this example, I'll be waiting for potentially the retest underneath this key level. So you can see price ends up having that reversal. So we're going to be looking for the potential retest of your opening candle print low and your opening print retest as well. And you can see in this case, fairly similar to what happened yesterday. Price didn't come up, retest your opening candle print, headed lower towards your previous low of day first. So now, right, this setup is invalid. And now we're going to be looking for another potential setup, which is what? Your break and retest below your previous day lows. And you can see we're on the 5-minute chart here, right? We're right around your previous day lows. So we're not going to be looking to take positions now unless it's below your previous day lows, right? If it's below your previous day lows, we can be looking for potential continuation. If it stays above your previous day lows, right, it's going to kind of reverse back inside this range. So we'll kind of play the tape. You can see price finally has a strong candle closure below your previous day lows. So now we can use this as a potential kind of flip. We kind of mark this over, drag this over. We're now underneath key levels as well. We could be using this as a potential retest for now continuations towards the downside. The price, you can see, taps back into your previous day low level, essentially this order block as well. You can be looking to get in short with a stop just to break above, and you could be looking for low of day and potential continuations towards the downside as well. You can see, right, price end up having that nice move, and yeah, continuations towards the downside. So that's going to be it for me today. I hope you guys enjoyed this video. I feel like it's a very special video, understanding the power of just one candlestick. That could be the previous day's candle. This could be the opening candle, right? Based off those candles, that's how I form my thesis intraday, right? I use these concepts on a day-to-day basis. So I hope you guys enjoyed that. If you did, I appreciate if you guys drop me a like and sub, and I'll see you guys next week for a brand new video. Peace.